Hello everyone, welcome back to my channel. Today we're talking about GameStop and the positives and negatives that I see that came out of the whole debacle. I think first things first, let me discuss how I would invest in a company. I think that I'm more of a value investor, and not only does that value have to come from the actual company's potential earnings in the future, but it also has to do with how it aligns with my own value system. For instance, I wouldn't invest in a company like McDonald's or Coca-Cola because I believe in healthy living and I think they promote an unhealthy diet. So therefore I wouldn't invest in them. So it's value plus investing. So on the topic of GME, the market is now open to these wonderful guys called armchair investors or retail investors, both of which I find relatively derogatory terms. So the short squeeze that happened, powered mainly by the Wall Street Bets Reddit forum against short-selling hedge funds like Melvin Capital, highlights some notable changes in the way that we may trade stocks in the future. Just for your information, Melvin Capital had a 53% return in 2020, equating to $849 million for Gabe Plonkin, the manager of the fund. That's his money personally, so I'm not going to waste any tears worrying about his short squeeze loss for the rest of this video. So let's go back a little while, back to pre-1929 Great Depression time, and let's analyze how the markets were going at that time. Back then there was mass hysteria on the stock exchange. Every Tom and Jane was investing, and it was a great idea because US stocks just seemed to keep going up and up and up. The only problem with this is that, of course, the injection of capital into the market was mainly through leverage and margins offered. Fast forward to today, there seems to be again mass hysteria on the market with massive over-leveraged positions both on the short side and the long side, with people getting options and margins offered on trading platforms like Robinhood. The US real GDP last year shrank by 3.5%. which equates to about $600 billion in shrinkage. While of course the Dow Jones just keeps going up and up and up. So back to GME. We all by this stage know what a short squeeze is. If you don't, please check out the videos that I've linked below. We all know now how dangerous a short position can be and how much money, which is exponential, you could possibly lose. Just ask Gabe Plonkin, who lost all his 53% gain that he had in 2020 in 1 month of trade in 2021. So let me now look at some positives that have come out of the whole GME debacle. Number one, I think that big funds, big hedge funds will now think twice about over-shorting a stock. Why do I think that this is important? Well, not only because it devalues the stock, even if the value of the stock is overinflated at the time, but also because I think that the stock market, although everybody seems to call it something like robust when they're discussing it, I don't think it's robust at all. I think that it's always teetering on a knife edge, and I think that panic is just around the corner. And once panic sets in, major malfunctions happen in the stock market, leading to the inevitable demise of, yes, the middle class and lower class specifically. The second positive is it highlights the fact that major hedge funds do manipulate price, and they do it legally. I find it ridiculous that someone can short a stock and then go on CNBC and advertise the fact that they've shorted the stock by defaming the company that they've just shorted. A third positive is that it has highlighted the fact that leverage short selling can over leverage a short selling position by over 100%. This fact is mind-boggling to me. How can you short a company by over the value of its current stock float? Hopefully the SEC will come to the party and actually do something about it, but as we know, they probably won't. The fourth positive is that armchair traders like you and I have made a massive statement. The Wall Street subreddit has grown from 1.5 million users to over 8 million users in 1 month. That is a super large base in order to affect change in the stock market. The fifth positive I see is that it has almost been portrayed as a mini revolution, where the Wall Street subreddit armchair traders, retail traders, have taken on the hedge funds and won. The sixth positive that I see coming out of this the GME debacle is that trading apps like Robinhood, which are Silicon Valley sort of startups, have been highlighted to have some major flaws, which hopefully now can be fixed. So that's it for the positives on my side. If you can think of more, please add a comment down below. Let's get on to the negative side of this whole debacle as brought to the forefront. The whole event has been extremely well publicized on every single news channel, every single newspaper, as the sort of David and Goliath episode that it has been. The only problem with this is that a lot more people have interest in investing in the stock market. Now that in itself is not a bad thing. Anybody who has savings, we all know that those savings are devaluing every single day that they remain in a bank account. However, some people investing in the stock market have no business being there. In many ways, myself included. Investing, when done properly, can have a major beneficial effect on your wealth and the well-being of your family. However, what's been publicized here is the crazy betting frenzy that the Wall Street bets guys stand for. The allure of the quick buck and the all-or-nothing approach can have some really disastrous outcomes. Now, let's be honest, it's made for some wonderful television, wonderful viewing, and it enabled me to make a video on it. So we need to ask ourselves if this kind of debacle is the way that we attract people into the stock market, if it's the right way. If you are coming into the stock market under the pretense of going all or nothing and the quick buck being made, please think again, it's going to end in disaster. The second negative I see here is that a lot of the Wall Street bets Reddit users are extremely bright, and I feel that their approach to valuing stocks and deciding on which stocks to invest in has been diminished by this whole debacle. I feel that they are viewed as yahoos and cowboys investing in YOLOs and so on, expecting a massive return very quickly. However, I believe a lot of them do some real homework and have some real intelligent discussions on whether to purchase a stock or not. The third downfall that I see through this whole debacle is that with more people entering the fray, more margin and more leverage is enacted. If history has taught us anything, leverage and margin have always led to disaster and recessions. Playing with money that you don't have is a dangerous position, whether you're an armchair trader, retail investor, or a massive hedge fund. The fourth and final negative that I wish to highlight here is that with more people investing in the stock market, the disparity between actual economic Main Street and Wall Street is just becoming wider and wider. The price to earnings ratio on the S&P 500 is already over 30%. This is just waiting for one massive market correction, in my opinion. The more people entering the market on long positions, the more the disparity will grow. And the bigger the disparity, the harder the fall. So with all this being said, where do I stand on the topic? In a word, cautious, but not optimistic. The phrase "to lose a battle" is okay, so long as it's not the war, comes to mind. The backlash of this may be severe and far-reaching for the normal armchair investor, with regulators throwing their weight around. Historically, big money seems to always win, and very often not done in the most ethical of manners. A final thought on this matter. In 2020, while we were stuck in lockdown, worrying about our jobs, our rent, our food, our healthcare, the top hedge funds were simply making more and more money. According to Bloomberg, the top 15 hedge fund managers increased their wealth by $23.8 billion last year. And they are going to try everything to maintain that disparity in wealth. So while you may think that the GME short squeeze can be something that we can replicate continuously in the future, and that the quick buck is very alluring, please invest with your head and not your heart. And don't simply hodl something just to prove a point. Don't forget, it's your hard-earned money that you're playing with, and Wall Street does not care about whether you can pay your rent or not. So there you go, guys. Thanks very much. That's my short little analysis on the GME stock debacle. Well done to Wall Street bets, guys. Well done for proving your point and sticking it to the man. If you liked what you saw here, please like the video and subscribe. Hit the bell icon if you want to see any of my future videos. I will be uploading at least 2 or 3 videos a week from now onwards, with current news on stocks and trends, as well as some entrepreneurial ideas, and most importantly, how to make money ethically in this world that we live in. Anyway, see you guys next time. Thanks very much.